Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. And this week's topic, which I think is a timely topic, is IRS payment plans and options for settling your tax debt. So this is an interesting one because we do get this this come up pretty much on an annual basis with usually a handful of clients. Some have a larger tax liability than they may have originally anticipated. So we're just going to talk about what some of the options are for you to ultimately settle that liability. So who does this apply to? Well, for us, the people that we typically work with, again, we're typically working with business owners, but this could be someone who's a self-employed individual. This could also be an individual who, just anyone who is struggling to pay their taxes in full, either having withholdings taking out of some type of standard pay salary, or just again someone who has a balance due, a significant balance due at year end. You don't have to be a business owner to have a large balance due at year end. So again, we're going to walk through with some of the different things that could happen and what your options are and so on. So what happens if you can't pay your taxes? Well, simply there's going to be consequences to that. So you're going to incur penalties, you're going to incur interest, depending on the length of time in between when you have the ability to ultimately pay. You could potentially be subject to liens, levies on your bank accounts, things like that. So it can be something simple as penalties and interest all the way up to, unfortunately, the taxing authorities levying your cash bank accounts. So it's important for you to take action early. You don't want to wait until you get to the point where the agencies are, in fact, levying your bank accounts. If you've gotten to the point where that is, in fact, what is happening, you've clearly gone a significant period of time where you have not responded or made an attempt to make a payment plan or something like that. The service has their prescribed remedies, so everything has to be done on a specific timeline. So if you've gotten all the way out to the point where you have been levied, you've clearly been getting letters. Typically, at that point, all of the letters are coming to you certified, and you're just not opening them at all. And you're a good 12, 18 months into the process. So there are other things you can do in the interim, and we're going to talk about those in just a minute. But you need to take action early. Do not wait until you get to that point where you have been levied, because it's a lot harder to unwind the levies. It's a lot easier to get you into an installment agreement early on versus, again, getting all the way down the road where you're getting levied. So what are some of the options? So you're going to have your short-term payment plans. So if you owe under $100,000, and I know some of you are thinking, wow, that's a lot of money, but for some business owners, they could potentially have liabilities that are that large, if not larger. So, you have up to 180 days to make those payments. So that's considered a short-term payment plan. You're going to have your long-term installment agreement. So this is going to go a longer period of time. This is where you're paying a monthly payment. The max you can go out is 72 months. And again, that's if you have a liability under $50,000. Those can be actioned right on irs.gov, which is a lot easier than it used to be, that's for sure. Again, you're incurring penalties and interest while you are repaying that installment agreement. But again, that's an option. If you have a liability of under $50,000, you can get into an installment agreement for up to 72 months. So you pay that on a monthly basis, like you would be paying back any other type of debt. There are, there are certain ways or things that you need to do in order to be eligible for these various options here. So you want to be mindful that for example, a long-term installment agreement under 50,000 is not as complicated as an installment agreement if you are in fact looking for an agreement over $50,000. So again, for example, The installment agreement under 50 is typically a one-page document that you would submit to the IRS, or you have the ability to go onto irs.gov and request that installment agreement on the website now. But it's a one-page form. You're putting basic information, name, address, those types of things in. You're putting in your banking instructions because they're going to auto draft you, etc. If you need an installment agreement for over $50,000, it becomes a lot more cumbersome process. So there is a full financial statement form that you need to complete, listing your assets and your liabilities. So if you have any, debts, personal debts, mortgages, so what are the terms on that? Your monthly payments, the interest rate, et cetera. It's a very extensive form, as well as filling in what your monthly expenses are so that they can actually determine what your potential for paying back that liability is. So it's a much more cumbersome process. Again, like anything else, you want to attack it early, right? So requesting that installment agreement right out after you file your return, if you know you don't have the ability to pay it. That way, again, you're not getting chased, you're not getting the letters in the mail, et cetera. And you're also incurring penalties and interest for the longer that you go and you don't pay. So you definitely want to, like I mentioned earlier, attack it early, before it gets out of control, because there are options, to get it before it becomes so unwieldy that you owe more money than you probably originally the liability was, and now you've incurred so much penalties and interest, and maybe your liability is now double, which we don't ever want to see anybody spend any more money than they need to. So working out some sort of installment agreement early enough is, definitely one of the things that you want to think about, working with whomever, your EA or your CPA that you're working with, to help you with that. Another option that is available is something called an offer in compromise. And so basically what is happening in that situation is, they're going to agree to accept less than the full amount owed. What you will see is, if you've ever seen some of the commercials on television, talking about how the particular company was able to, slash someone's tax liability. They're typically going the route of that offer and compromise. It is an extensive process. Typically, in order to qualify for it, you need to show some type of financial hardship. You need to show your inability to pay the full debt back to them. Again, those are options for you, but there are also steps that you have to follow. And what most people need to realize when it comes to any one of these options, offer and compromise, an installment agreement, the services, the Internal Revenue Service, the state agencies, all have their prescribed practices and processes. And so you have to follow those steps and determine whether or not you actually apply. And, if you don't, in most cases, follow those steps and do what you're supposed to do, you have the chance where you could potentially get rejected. So it's really important to understand that while something like an offer and compromise is an option, it's not the easiest one to get, because as I mentioned, you have to show some sort of hardship. So seeing the commercials on TV of all the companies that, save people wild amounts of money, not everybody qualifies for that. So that's something that you want to consider. If you have assets that could potentially satisfy that liability to the various taxing authorities, you probably do not qualify for an offer and compromise. So those are things that you want to consider. You have to understand what your actual options are, versus, the guy next door's options are going to be different. And I mentioned that a lot, on here with regard to pretty much everything we talk about. A lot of this stuff is not one size fits all. Just because one person does it doesn't mean the other person has the ability to do it. So you have to understand what you're eligible for, what you could potentially qualify for, and then the best way to move forward, and following all the processes in order to do that. There are other things, there are other options as well. There are things like, currently not collectible status. And that is typically where the service may pause the collection of your liability because of a financial hardship. That doesn't mean it's been erased. It just means it's paused. So again, typically you have to prove the hardship. So they're not just going to take your word for it. You're going to have to supply additional forms to actually show them that you don't have the capacity to pay for it. Typically, those types of arrangements will only last for a specific period of time, typically 3 to 5 years. And then after that, you have to reapply and then again continue to show that you have the financial hardship. So this, again, is not a one and done. A lot of times these are things that need to be dealt with on an annual basis, or you need to go back and revisit and reapply and so on. There are abilities to get penalties abated. There are typically in situations, for example, we have seen things like innocent spouse where you get to request relief from your penalties. Again, that has to be specific to your situation. There are going to be specific qualifications. We're not going to go into all of those, but understand that is a potential option for you, but not everybody qualifies. And then you have to meet certain standards in order to qualify. There's also bankruptcy and tax debt. Now, keep in mind there are some things that could potentially get discharged in a bankruptcy. So income tax debt can be discharged in a bankruptcy. What cannot be discharged in a bankruptcy are any trustee taxes. And so you're probably asking, what is a trustee tax? Any taxes, things like payroll withholding taxes. So if you did not make the federal tax deposits on behalf of your employees in your business, that cannot be discharged in a bankruptcy because those typically were never your own taxes. That was monies that you were withholding on behalf of your employees and remitting to the tax authorities on their behalf. So that was never your money. And so the agencies feel that that was never your money and therefore you cannot discharge it. Same thing with, for example, a sales tax. If you owe sales tax to the states or the jurisdictions that you operate in, that could not get discharged in a bankruptcy. So bankruptcy discharge is possible, but understand it is not possible for all the tax liabilities. You have to understand which ones can and cannot get discharged in a bankruptcy. Best practices for anything related to managing your tax debt is like just about everything else we talk about on here. You've got to have an open line of communication with the agencies, right? Reach out to the IRS, reach out to the states that you're operating in if this is a liability to your states. If you don't communicate with them, then you have more of again, you're moving through their process. You're hitting those dates and those milestones. You're getting the letters. You're getting, again, the levies and so on and so forth. Communicate with them. Again, it gives you more of an opportunity. You have more options for things that you can do when you've communicated with them. If you go silent, you start to limit the options that you have available to you to actually pay back this debt. When it comes to tax liabilities, just like everything else in your business, if you are a business owner, you need to be budgeting for that tax liability. You're going to have some sort of tax liability at year end. If you are our clients, if they are good at what they do, they are paying tax. We are doing the best that we can to help them minimize that tax, but profitable business owners are paying tax. So let's budget, make sure you're budgeting to actually make those tax payments, putting money aside every month. For every dollar you bring in, how many cents are you putting to the side to your tax liability because you're going to have a tax liability. Always consult whoever you are working with for tax purposes. That might be your CPA, that might be your EA, your enrolled agent. All are qualified to report in front of the IRS or in front of the states. They can help you to determine what your options are. Again, if you communicate early, not only with your tax CPA or your EA, and then communicate with the tax authorities earlier, you leave yourself open to more options. If you don't, and if you wait too long, you start to limit the options that you have available to you. And again, we want to give you more options. We want to have more options available um, to potentially satisfy any liability you have instead of unfortunately waiting too long and getting stuck with one crummy option. And that's never the best option for the client. If any of you have any questions, please feel free to drop them in the chat. We always love to hear from you. Please feel free to subscribe to us on YouTube as well as follow us here on Facebook. I look forward to seeing you here every Friday. Have a wonderful weekend, and we'll see you here next week.